What's up, everyone? Dylan here. I wanted to hop on and do another episode of a very short and sweet analysis video going into tomorrow's main event, which is FOMC Fed decision. Then we have jobless claims on Thursday, and then on Friday we have triple witching and some rebalancing activity. So the next 3 days can present some very volatile action. So I wanted to hop on and talk about some key areas to look out for. Okay, a lot of people are trying to figure out whether the Fed is going to cut 25 basis points or 50 basis points tomorrow, right? I don't necessarily think that the size of the cut is what matters. I think it's more so the implied pace of subsequent cuts. So I think the dialogue is going to be important. However, by the time you digest the Fed rate decision and then, what Powell is saying, it's going to be very, very difficult to capitalize on the moves. So before heading into tomorrow, you should have a very, very clear and concise idea of the key technical areas on your chart. Hence, that is what I'm going to, put out for you guys. So going back to last week, I talked about some key technical areas to look out for that worked very, very well. So on my chart is the September futures contract. I wanted to talk about two different pieces of context that will be yet again important going forward. Okay, so last week I talked about two different things. I talked about 54.14, which was the 100-day moving average on the cash index of the S&P. You could clearly see that marked almost the dead tick of the low from last week. So it was very, very important and it worked very well. Also, I talked about the anchored VWAP stemming from the September highs, okay? At the time of the last video, I had said that it was key resistance, right? You could see resistance there, there, and then two more times after I made that video, which ultimately, led to a nice breakout above, okay? So since that broke out above that anchored VWAP, we have not retested, okay? So the rule of thumb is a strong resistance area should then turn into resistance, or it should then turn into support once it is retested. So that is going to be very, very important going forward, okay? So I am now going to turn over to the current December contract on the S&P 500 futures, okay? And to preface, I use this setting down here, right? You see where my cursor is? Adjust for contract changes. Unless you have that setting turned on your charting platform, your charts will not look the same as mine. So it's very important to understand that I have that setting turned on. I'm more comfortable and I prefer it like that. There's no right versus wrong. That is just what I've been using since the start of 2023. The reason I started using it is because ever since the start of 2023, for whatever reason, the S&P 500 futures, each time they roll into a new contract, they've had a much wider spread from the last contract to the new contract. In this case, it was 60 points. So before 2023, the spread between those two contracts was like 5 points. So it wasn't a big deal. But ever since that spread kind of, expanded, that's when I have started to use that adjustment, setting. Okay. So going forward, we're still looking at those two key areas of support to the downside. Okay. Like I said, that anchored VWAP has not been retested as support. So that is going to be very, very important. On top of that, it might align with 5,600, okay, which is yet again another piece of important context because psychological whole numbers tend to act as support and resistance. So the longer time spends up above that anchored VWAP means that it will continue to kind of be in an upslope manner, okay? So by the time this does retest, if it does, right, that will probably be up in that 5,600 range. So I would recommend drawing the anchored VWAP on your chart so that you're not relying on me to tell you guys in the Discord real time, okay? So that's very, very important. On top of that, we have the US 500 100-day moving average, which we talked about last week, which ended up marking last week's low, okay? So you could see it has acted as support on the last 3 tests. Friday the 6th, right, September 6th, then Monday, September 9th, and Wednesday, September 11th, all tested that 100-day trend line, 100-day or 100-day simple moving average, and acted as support very, very well. Okay, so going forward, we're going to look at the 100-day moving average equivalent to the futures. And how you do that is very, very simple. You take the price of S&P futures, which is 57.01 at the time of me doing this, minus the price of US 500, which is 56.37, right? My fault, 57.01 minus 56.37, okay? You get 64, okay? So the spread between the futures and the cash index is 64 points. So then you take the 100-day moving average price, which is at 54.38, plus the spread, which is 64 points, and you get 55.02 on the S&P, okay? So that's going to be very, very important going forward because that represents the 100-day moving average on the S&P 500 futures in reference point to where, where it lies on the cash index, okay? So I'm going to go ahead and put 55.02 on here, 55.02, and I'm going to put cash index 100 SMA, okay? So those are the 2 main areas for downside moves just in case a pullback occurs over the next 3 days, okay? To the upside, very simple. We have a trend line stemming from August 22nd, okay? You go ahead and mark that trend line and attach it to the high of Monday, August 26th, and the high of Monday, September 2nd. And you could see that's exactly where we got up to today, and we failed there. So that marks 4 different tests, 4 different daily tests at that trend line that all failed to break above as sellers have been defending that line, okay? So on top of that, in case that breaks to the upside, the next level above is the all-time high on the contract adjusted S&P 500 futures, which is 5782.5. I'm going to go ahead and make this gold, okay? So 5782.5 marks the all-time high on the S&P 500 futures with the adjustment setting on, okay? Remember, you have to have that setting on for your charts to look like mine, okay? So if that trend line breaks to the upside, you would want to see price be able to get bought on dips above, right? You want to see something like this, where price comes up here, breaks above, and then you want to see dips above that black line get bought for a move to new all-time highs, okay? And, important to note, if that does occur where 5782.5 does break and price moves above that, that means that S&P will go into uncharted territory, which is new all-time highs. So above that, I don't really have solid levels. Maybe use the psychological whole numbers, so like 5800, 5850, 5900, so on and so forth. Okay, so those are the key areas to look at. You have the trend line and the all-time highs to the upside, and then to the downside, in case a pullback happens, you want to look at the anchored VWAP, which will be the first retest at that previous resistance, and then below that, you have the 100-day moving average on the S&P cash index, which has proven over the last 3 different tests to be very, very, very key support. Okay, so that's it for me. like I said, these are what I will personally be watching, and look out for key, the key events over the next 3 days that will probably trigger some increasing amounts of volatility. Peace.